If you're still responsible for this business in 20 years from now, what decision do you need to make today? That is the question I want to put in front of you in this episode. It's the question that every CEO, founder, board chair, and principal of a company that makes physical things is going to have to answer, whether they answer it deliberately or by default. And it's the question the head of sustainability cannot answer for them because the answer does not sit at that level of the company. This episode is for the principals of those companies and for the design directors and sustainability leads who are working alongside them. There are 3 scores of years involved in the question. 2 of them are behind us. They run from 1987 to 2026, from the year the United Nations published Our Common Future, the report named Sustainable Development, and put it onto the desk of every government and most of the larger corporations in the world, right up to the year we're sitting in now. 40 years, 2 full scores. 1 more score is ahead of us. It runs from 2026 to 2046, the same length of time as one of the 2 that are behind us, and the score that is currently being decided now. I want to walk you through what the 2 scores behind us actually produced, what they did not produce, and what the 1 score ahead has to do differently. The 2 scores behind us produced an enormous amount of activity. Reports were published, targets were set, frameworks were built, GRI, SASB, TCFD, CDP, ISSB, and the dozen others I'm not naming. Certifications were created and awarded. Disclosures became mandatory in jurisdiction after jurisdiction. Sustainability functions were established inside corporations that previously had nothing of the kind. Tens of thousands of capable people went to work on the problem. I was one of them. I've been a practitioner in this field for the entire 40 years. I helped launch the Sustainable Packaging Coalition. I managed the formation of the Cradle to Cradle Products Innovation Institute and its certification program on behalf of Bill McDonough and Dr. Michael Braungart. I spent more than 2 decades at SC Johnson, the last few Director of Sustainable Product Innovation worldwide. What 2 scores of work produced was a real and substantial layer of activity, sitting on top of the businesses it was meant to change. What it did not produce was a bent trajectory. The curves we were trying to bend, emissions, materials, biodiversity, fresh water, ocean health, they're not bending in proportion to the effort that was applied to them. Some are not bending at all, some are even bending the wrong way. The question I want you to sit with for a moment is why? The honest answer, after 40 years of practice, is this. 2 scores, 40 years of work were applied to the wrong layer of the company. The reports change, the targets change, the materials change at the margins, the disclosures get filed, and underneath all of that, the operating system of the business, the actual design rules that decide what gets made, how long it lasts, what it requires to produce, and what happens at the end of its productive use is doing exactly what it was originally designed to do. That operating system was laid down across the Industrial Revolution and refined across the 20th century. It was specified to produce goods at scale, cheaply, repeatedly, and on time. It was not specified to produce goods the planet could continue to underwrite. That part of the brief was not in the original document. 2 scores, 40 years of sustainability work did not change the operating system. They added a reporting layer on top of it. Because the operating system did not change, The trajectory the operating system produces did not change either. That is what I mean when I say the work was applied at the wrong layer. Not that the work was wrong. The work was correct for the layer it was being applied to. It's the layer that was wrong. The score, 20 years ahead, begins now. It runs to 2046. And the question is not whether more reports get filed or more targets get set, because more reports and more targets applied to the same old layer will produce more of what the two scores behind us produced, which is to say, not a bent trajectory. The question is whether the operating itself gets upgraded. There's a name for what an upgraded operating system produces. I call it full spectrum abundance. Most companies at the moment are running on a version of abundance that's partial. The accounting captures financial output and very little else. The decisions get made mainly on the basis of that partial picture, and the parts of the picture that are not captured, the condition of the watershed the factory sits in, the soil the supply chain depends on, the long-term integrity of the materials the product is made from, the trust the brand has accumulated with its customers, the conditions under which the next generation of employees will be willing to work. All those parts get drawn down quietly, while the financial number goes up. The financial number going up, while the rest of the system gets drawn down, is not abundance. It's partial abundance. Abundance on one axis, deficit on the others, and the deficits eventually arrive on the financial line as well, just later, and often all at once. Full spectrum abundance is what a company produces when its operating system is configured to make the financial number go up and have the surrounding system more abundant than it found it. Not as a trade-off, not as a balance, as the same act. That is not a marketing claim. It's a description of how living systems actually work. A mature forest produces an extraordinary financial yield in the form of biomass, oxygen, water cycling, soil formation, species diversity, while leaving the surrounding system more abundant than when it started, when it found it. The forest does not trade one against the other. The trade-off is an artifact of the operating system humans are using, not a property of the world. A company running on full spectrum abundance has costs, risks, and assets on its balance sheet that look different from a competitor that's still running on partial abundance. Different fundamentals. It's the kind of difference that compounds across a score of years. If you are still responsible for this business in 20 years, the operating system the business is running on 20 years from now is the operating system you decide to put in place today. Not the targets are an output. Not the report is a description of the output. But the operating system itself. That decision sits at the level where the design rules were originally set. Founder, CEO, board chair, principal. It's the only level at which the operating system can be changed, because it's the only level at which the operating system was originally specified. The score 20 years ahead is long. It's long enough to do real work, but it's short enough that starting at the right layer, right now, is no longer optional. The two scores behind us added a layer on top of the existing operating system, and that's the layer to do the work the operating system was contradicting underneath it. That is the work I've spent 40 years inside of. I'm telling you on the basis of that practice, the score ahead has to be different. The decision that makes it different is yours, not the head of sustainability's, yours. If you're still responsible for this business in 20 years, what decision do you need to make today? The answer is the one decision that 2 scores of sustainability work could not reach because it sat at the layer above, the layer and the decision about which operating system the company is going to run on for the score of years ahead. Full spectrum abundance is what the upgraded operating system produces. We will keep walking the steps that lead there in the weeks ahead. I'll see you next week.